Let's talk more about markets. Peter Boockvar is here, Chief Investment Officer at one point at BFG Wealth Partners and a CNBC contributor. Good morning to you, sir.
Andrew.
Help us understand what you think is actually going on here.
In markets,
yes,
economy,
in markets.
Well, I think this rally, the AI tech trade got a second wind after the DeepSeek news in late January. And who doesn't want to buy stocks when the Fed is cutting interest rates? So I think that's what brings us to where we are today. But there's some obviously other interesting things going on, like with the price of gold, the value of the dollar, long-term interest rates.
And that's the question, though. You see these sort of very strange cross currents, right? You have equities at these highs. You have gold at these highs. What does that even say to you?
Well, the genesis of this gold rally really started in 2022 when the EU and the EU and the U.S. confiscated half of Russia's gold reserves. Imagine the look on Xi Jinping's face then when he was holding $1 trillion of U.S. treasuries, and he said, wow, they can do that to Russia, maybe they can do that to us. So China and a lot of other central banks started the stampede into gold as Western investors were selling because all of a sudden they were buying treasuries because they had an interest rate finally for the first time in 15 years. Since then, this year, you've had weakness in the dollar, you have the Fed cutting interest rates, you had retail and institutional investors that are now piling in. So gold, I think, has had its own dynamic relative to other parts of the market.
Where do you stand on, we had Paul Tudor Jones on the broadcast earlier this week, and he made a comment how he thought we could be in October of 1999, which is actually not a bad place to be because the market still, I think, had something like 40% to go from there. You just had to know to get off the train at the right time.
There's certainly similarities after living through that. Trying to time that, I have no idea. I do know that, similar to that time frame, the amount of capex that was being spent was extraordinary, and we saw the end result of that. And the amount of capex today is quite extraordinary as well, defined as Oracle spending half their revenue, not cash flow, half their revenue on capex,
right. And
Meta and Microsoft spending a third of their revenue. Hopefully it pays off, but those are big numbers.
I don't know how you trade what he said. I mean, Paul Tudor Jones. I mean, I was watching, but
I think what you do is it's like a Chuck Prince kind of situation. You're supposed to dance while the music is still playing.
Andrew, I know what he's saying, but
you got to find a seat though when it stops.
It's win-win. He was dead wrong in May and couldn't have been more wrong. And you pointed that out because he said we're going to go to new lows.
Right.
Now his thing is, oh, something really bad is coming. But before something really bad comes, it's going to be unbelievably good for as long as 2 years. So
possible.
It's going to be. Yeah, it is, but it's either you're covering, it's going to go much further, and you're also covering any time it could really collapse and be really bad. So what information are you really giving us? You can't trade that.
I think the trade is to actually be long equities right now.
As long as 3 months, 6 months, 9 months, a year.
I'm sure he'll be back, hopefully, before he has to make the call about when you're supposed to be out or not.
Maybe it'll be like the call in May.
But the interesting thing then, while the air came out of the 2001 tech bubble, other parts of the market did very well. There were stocks left for dead in the late 90s, ex-tech, and they actually did very well in 2000 and 2001. So just because that part of the market eventually falls, which it will at some point because the numbers are so extraordinary, but that doesn't mean that other parts of the market, international stocks, there are plenty of other things that can do okay.
Peter Boockvar, thank you, sir.
Thanks.
Come on back. We'll see. We'll see when the party begins or ends.
What's the new company now?
One Point BFG Wealth Partners. The BFG is retaining the big league.
What is it?
One Point Wealth Partners with a BFG in the middle.
BFG, what's that?
Bleakley Financial.
Oh, okay.
Yeah, I think
So it was a rebranding.
No, I didn't.
Did I mangle that? I probably mangled that.
I think BFD, I think, and then I used to like it when you were Bleakley because you're always so bleak, right? I mean, it was, where'd you get this? That was somebody's name.
That was somebody's last name about 40 years ago.
It wasn't your view on life.
No, who left 35 years ago, so it was time for a change.